It is your weekly mining show courtesy of the more than 100-year-old Northern Miner newspaper, broadcasting from Summer. We do it every week here. It'll be interesting to see what happens when Christmas happens on a Tuesday. I don't know if I've missed a show since I started back in 2019. So it'll be interesting. If Christmas is a Tuesday, then maybe we still do something anyway. A little secret broadcast. No breaks taken here because, of course, the news doesn't take any breaks, even in the summer, as we've been learning with Victoria Gold. Hello and welcome to the Northern Miner Podcast. My name is Adrian Pocobelli. As we take a step back from the story, 3-4 weeks later, ultimately we have to see this as a huge tragedy. It sounds like, and again, the information is sparse, but from what we gather from Blair McBride's excellent reporting, hundreds of people have been laid off in Yukon who worked at this gold mine. The First Nation of Notcho-Nyuk-Dun is not receiving their royalties. The stockholders have been decimated, as we heard directly from a shareholder last week in the YouTube comments. Shareholders have been decimated. There's kind of no real happy outcome out of this, other than trying to kind of make what we can out of a bad situation. And ultimately, taking a step back, we do have to be happy that there were no major injuries or deaths. I think that's another thing. Financially, it is, harrowing. Environmentally, still a whole bunch of open questions. At least no one was directly hurt by this, what could have been a major accident. Remember the testimony from last episode. I was telling friends over dinner the story of this guy going, 200 meters down in his little Caterpillar machine as the landslide of this heap leach pad occurred, almost claiming, as the story was told to Blair McBride, to almost being buried alive. So worrying that his coworkers had been killed. They were kind of hanging off the edge of their seats as they heard this story. So just putting things in perspective with a little bit of time, taking a step back, despite all of the mistakes, arguably, negligence. I'm not here to make that judgment, but we have some more, unfortunately, tough stories in regard to this in the last week, again, courtesy of Blair McBride. Despite all of that, I think looking at the positive side of things, nobody got killed. Despite how this arguably hurts the reputation of mining in Canada, despite the environmental contamination and ongoing issue of this unstable heap leach pad, despite a bankruptcy. In a sense, this is all just, and I use the word just with a certain degree of caution. But again, I think we should be happy. Nobody was killed here. The operator whom we heard from last week did seem to have a neck issue that could be serious. But again, just looking on the positive side of this story, nobody was killed. So let's take a quick look here at the latest. Quite a sensational story, as you're going to hear from the headline here. Quote, drug Disneyland, end quote, part of lax safety culture in shadow of Victoria Gold accident, workers say. So a new story from Blair McBride at the Northern Miner, and here it is, July 17th. A landslide that stopped production at Victoria Gold's Eagle Mine in the Yukon may have been inevitable due to the company's weak approach to safety protocols, current and former employees say. Individuals who approached the Northern Miner to share their experience of working at Eagle told of neglected incidents and repairs, attempts to subvert injury reports, and widespread drug and alcohol use in a supposedly dry camp. They asked not to be named to avoid career repercussions. Quote, I would see workers constantly complain about specific safety issues, end quote, said a former member of the Health, Safety, and Security Department who worked at Eagle for 4 years. And the worker continued, quote, and it was just pushed off on the back burner. Oh, we'll get around to it. We don't have parts. We don't have time, people would say. The lax safety culture may have contributed to Victoria's difficult position. With operations at Eagle suspended after the June 24th heap leach spill and landslide, the company faces $232 million in debt payments and no cash flow. The incident tanked Victoria's share price by more than 85% during the last week of June. The single asset company now has a market cap of $54 million. Victoria has issued 3 news releases since the accident. Again, this is written on July 17th. It has not responded to multiple requests for comment. The precise cause of the accident is being investigated. Quote, "There was always an excuse why we couldn't fix anything or make it safer," end quote, the former safety staffer said. Quote, "It was always just pushed back, production versus safety," end quote. You see how safety, being overly cautious in regard to mining, this is a clear-cut example of how it's actually the pragmatic thing to do. If you are trying to maximize your profits, you actually need to prioritize safety, because now look at Victoria Gold. So an interesting tale of what I, sometimes call here short-termism versus long-termism. Yeah, short-term, maybe you don't need to spend that money or hire that extra person or just deal with things in regard to safety, but long-term, the price you are likely to pay is far greater than those smaller costs along the way on a purely pragmatic perspective. I hope that's a lesson that comes out of this. Let's just say, for the sake of argument, all values aside, it actually is pragmatic. It is the most profitable thing you could do in this environment, at least, to take care of safety, because it's not like they can just go back to work like they could, in the 19th century and not worry about the cyanide leak in the water supply, not worry about the safety. That's just not the situation anymore. So again, pragmatism dictates safety first. So one lesson I think we can get out of this story, let's continue. The worker agreed Victoria's alleged safety negligence stands out in its approach towards worker compensation board claims. When a worker was injured, the company was supposed to report the incident to the WCB, but instead of paying compensation costs, the worker would be kept on wages, told to stay home, and company records wouldn't show any injuries, the sources said. So we got a report of that last week, and it seems as though there's confirmation from the former safety department member who said, quote, "We were directed to send them computers and give them online training so they could stay at home and stay on the payroll, which wouldn't show any time loss," end quote. The department holds less than a dozen guards, supervisors, emergency response technicians, and paramedics, but it lost 14 people over 3 years from turnover. Quote, "They were just fed up and moved on to different jobs," end quote, he said. A heavy equipment operator who has worked at Victoria for more than 2 years, but who was injured more than a year ago, said the company avoids Workers' Compensation Board claims to limit payments and to keep insurance rates from increasing. The details of his injuries are being withheld because he's still employed by Victoria. Quote, "I got injured there and they do pay you to keep you from WCB, but only for 6 or 7 months, and then they said they don't have the technology to accommodate your working from home, like administrative work or training work. I've been fighting with the Workers' Compensation Board and the company because they didn't give me any support whatsoever." Now, interestingly, there was another landslide in January. And Blair continues, "Last month's accident was the second landslide to occur at Eagle this year, as the Yukon government confirmed in a news briefing in late June. The incident in January involved a smaller failure than the one in June and was on a stockpile that wasn't being leached. In heap operations, ore pads are applied with a solution containing cyanide that separates gold from ore. The equipment operator confirmed what another operator had told the Northern Miner in an interview last week about the aftermath of the January accident. Production continued after the slope failure, even though by regulation a safety stand-down or pause in operations must follow such events." So referring to the incident in January, quote, "We drove down from the top of the pad towards the lunchroom. Before I got out of the truck, I asked the mine manager, 'Is this a safety stand-down or is this a regular lunch?' He said it's a regular lunch. I said, 'I don't agree with that,'" end quote. Another operator who wasn't working on the pad at the time said there was no pause in operations. Quote, "It's true that the lockout procedure didn't happen there. Everyone just went to lunch," end quote. While drinking alcohol is prohibited at Eagle, one of the operators and the safety workers said drinking and drug use were tolerated. Quote, in the garbage can, I saw a whole bunch of beer cans and bottles and a couple of bottles of whiskey at the camp by the incinerator. You're not allowed to have booze there. It's a dry camp, the operator said. Drug testing only happened if there were metal-on-metal accidents involving machinery colliding with other machines, the safety department member said. Bags and clothing were checked when staff came onto the site, and there were no further investigations after housekeepers gave security staff drug paraphernalia they found in the camp buildings. And we have another quote from the former safety worker. Quote, unless they were caught and tested, it was basically open range. A cocaine-addicted man came to me and said, this is Disneyland for an addict like me. We just turned a blind eye to it because nobody wanted to dig into the deeper problem of how to control it. End quote. Now, you do hear this. I remember 15 years ago hearing about the drug use at some of these towns where people worked on the oil rigs. There's not much to do, and they have a ton of money, and they end up at the bar, and one thing leads to another. You just hear anecdotally. I'm sure this doesn't really come as a shock, unfortunately. Now, that was the oil industry, but, it's a kind of a cultural issue of working long hours away from family, nothing to do, lots of money, So, unfortunately, if I was to hazard a guess, I would say this probably isn't unique to Victoria Gold. However, it may be more egregious here. I mean, it does sound pretty bad, and it does sound like it was basically tolerated. I'm just speculating out loud here. So, all very interesting. The pieces of the puzzle are coming into place on this story, and it doesn't really look that good, does it? I mean, just to be as neutral as I can be on this issue. Like, it just doesn't really look that good, I think is actually probably the nicest way I could put that. Now, we got another development on the story. This was on July 18th, the following day. And this is also another aspect of this story, which was the government's role. Because as we heard from the heap leach professional of 30 years in a news story a couple of weeks ago, he was basically saying this mine should have never got off the ground. And then we saw in the press conference how representatives from the Yukon government were basically saying, this is 100% on the company to clean this up, and we're just here to make sure they're doing that. But ultimately, it is their responsibility, and we're washing our hands of this. But ultimately, they're starting to get brought into this story because the company, as we very clearly pointed out last episode, they can't afford to do this huge cleanup and, frankly, repair of this unstable heap leach pad. So here we have a new development. Yukon might assume Victoria Gold accident cleanup. Blair McBride, July 18th. The Yukon government is considering taking over the cleanup at Victoria Gold's Eagle Mine as the company struggles with the scale of remediation work. Lauren Haney, Deputy Minister for Yukon's Department of Energy, Mines and Resources, made the comment in a news briefing on Thursday. While cyanide levels in area surface water are declining, officials said Victoria must increase holding ponds and boost its treatment of cyanide-contaminated water from the landslide. And here is a quote from Haney. Quote, Victoria is diverting water, collecting it, doing a lot of work right now to try to treat it. That's not to say it's enough, but it's to say there is action being undertaken. We're looking at all scenarios right now, and one of those scenarios is where we would be taking over activities at the site in a more complete way. End quote. According to this last article, Victoria Gold has still not responded to the Northern Miners' requests for comment. And according to the July 18th article, let me just check right now. The last press release on their website is July 12th. It is July 23rd. So the dubious communication strategy continues, unfortunately. Let's continue here. So also in that briefing, we heard from Kelly Constable, Director of Mineral Resources with the EMR Department, who said, quote, as a temporary measure, the company is creating additional storage space by pumping water from the storage ponds through the heap, end quote. And Blair continues, that's meant to hold the water until it can be treated and released into the environment. But Constable added that Victoria's water plant can't treat all the contaminants in the water, and it's trying to upgrade the facility with the help of Lincoln Engineering. Those upgrades could take a few weeks. And here's another quote from Haney, quote, "They have a water treatment plant that is designed to treat to their effluent quality standards in their water license. It wasn't contemplated that the contamination levels would be as high as they are," end quote. And then we heard from Adrian Hill, who is from the First Nation of Nacho-Nyakdun's Treaty Department, who said, quote, "Recirculating contaminated water back onto the pad as an emergency measure because there's nowhere to put it is not ideal. We don't think the Yukon government is being transparent about how dire the situation is," end quote. So here we are, a month later. I mean, this happened. It is July 23rd. This happened June 24th. We are a month later, and the First Nation, who, if everything goes according to plan, we are going to have First Nation Chief Donna Hope on next week's show to get their side of the story. Blair quotes FNNND Chief Donna Hope in this article, quote, "We have high concerns that cyanide is sitting in the groundwater," end quote. "We're not sure where those numbers are coming from in regards to the groundwater. We're not sure how deep the wells are," end quote. And this is the big issue, right? Because I'm not sure anybody really knows. I mean, remember last week when we were seeing there was 0 readings of cyanide from Victoria Gold initially, and then a week later they were getting readings of cyanide? So to me, it just says like there's a whole bunch of unknowns here. And as you say to anybody on the street, do you want cyanide in your water? You know, so I think you'll get 100% no, right? So are you going to drink that water? No. So finally, just on the pause of mining, the First Nation asked for a pause on mining. So as part of this article, Blair asked Chief Donna Hope about this. And it says here, Hope clarified that even though the First Nation called for a moratorium on mining activities on its traditional territory after the Eagle accident, it's not against mining. Rather, it wants a temporary pause while the cumulative effects of the accident can be assessed, and afterwards sustainable mining activities should be pursued. Several contracting companies associated with FNNND worked at Eagle, and the suspension of operations there has forced them to seek work elsewhere. Hill said the economic loss from the end of royalty payments after the accident is, quote, significant, end quote. And that is another, other than the environmental impact, that is another, you might say, tragedy of this situation. And frankly, I think we could say this whole unnecessary situation are the hundreds of people who have lost their jobs. You know, it doesn't sound like there's another mine around the corner where they can just submit their CVs. So we're going to learn more, hopefully, if everything goes according to plan, with Chief Donna Hope next week. I'm very thrilled and excited to have them on the show. So that is your latest on Victoria Gold as we continue to follow this small mine in global mining industry terms, but incredibly significant story. Continuing on, we're going to hear from Henry Lazenby, who went to Rule Symposium in Boca Raton, Florida. This episode, it's super interesting, and apparently, according to Henry in this interview, copper was center stage. So that is coming up, and I just wanted to touch on a few more news stories here in the wider world before we turn to the websites. Here in the Financial Times, copper miners predict industry overhaul as end users rush to secure supply. Executives see increasing signs of a shift to direct deals with cable manufacturers, car companies, and other big buyers. And this is another theme we've been discussing here for quite a while, which is this idea that price isn't the final determiner of the situation. I would argue in a world short on copper, it's not as simple as we just raise the price of copper and then the copper comes online when we have wait times from 10 to 20 to 30 years on a new mine. So what you're seeing here is, I would say, forward-looking executives from car companies, cable manufacturers, and others saying, you know what, we just need to secure our supply. The price of copper, amazingly, is below $5, continues to fall. I mean, what are we at here? $4.18. It's almost business negligence if you need copper for the next 5 years to not secure whatever deal you can get right now at $4.18 copper, and maybe put in a bunch of futures and options and who knows what else. Because as you're going to hear, like Robert Friedland is saying, like there is nowhere near enough copper coming online. So let's just take a quick look here. So interesting development here. This is by Harry Dempsey and Rachel Millard in London on the FT. The world's largest copper miners predict closer collaboration with end users from car makers to utilities, upending a hitherto fragmented supply chain as shortages of the metal crucial to green technologies are set to flare up in the years ahead. And a very interesting quote from Jonathan Price, Chief Executive of Tech Resources, who said, quote, ultimately, those that will be utilizing the copper, whether that is for charging stations, grid build-out, or vehicles, will start to get more interested in how they access this copper. We will start to see more interest in direct linkages between the miners and those ultimate end users. We're starting to see and hear more of that. You know, we're going to hear from Henry in this episode that, you know, one of Rick Rule's favorite phrases is the cure for high prices is high prices. But what happens in a world that simply does not have enough copper? In a sense, sure, okay, if we have $80 copper, that should kill off demand and raise supply. But again, the lag in bringing in more copper online, it's quite the issue that continues to develop here. And here, copper's at $4.18. Here's another quote, Tristan Pascal, Chief Executive of First Quantum, from this article. And of course, they had their Cobre Panama mine shut down earlier this year. Quote, it's just getting harder and harder. There's no easy jurisdiction now. You can say you shouldn't go into Argentina or into the Democratic Republic of Congo, but where is easy to go now? End quote. Now, bucking the trend finally here is Jimmy Hermansen, Senior Vice President and Head of Group Procurement at NKT, a Danish cable manufacturer, who said, quote, currently we're not of the view that we face a copper shortage in coming years. In 2013, there were predictions of supply gaps in 2023, but that's not what happened. We have secured copper for our order backlog. Beyond that, it's speculative, end quote. Finally, Christine Lafemina, analyst at Jefferies, said, quote, I think we are heading into a world of serious supply constraints for copper. It's not like you can switch a flip to bring the capacity online. And that is the issue, isn't it? So, very interesting article out of the FT. Finally, just a few headlines here. Serbia inks lithium memos with EU amid Jadar's revival. So Serbia, the European Union, and Germany inked a series of agreements on Friday that may grant EU members, as well as automakers Mercedes-Benz and Stellantis, exclusive access to Serbian lithium. Very interesting. They signed a MOU, Memorandum of Understanding, only a week after Serbia's top court approved Rio Tinto's $2.4 billion Jadar lithium project, which would be Europe's biggest lithium mine. This is by Cecilia Jamasmi on northernminer.com, and a headline from Deutsche Welle. The next day, July 18th, Serbia protests on the cards if lithium mining goes ahead. And the subheadline, as Olaf Scholz travels to Serbia for a summit on critical raw materials, Serbian activists have labeled their government's decision to greenlight lithium mining, quote, an epic crime against people and nature, end quote. Continuing on, a few other significant headlines. This is Bloomberg. Turkish envoy visits Niger to secure uranium supplies. Subheadlines, Ankara wants the mineral to fuel future nuclear power plants. Turkey already has Russian deals for plant-enriched uranium. And there is speculation that the real reason Turkey is there is to expand its nuclear capabilities. Interestingly, that is speculation. And also an unusual story. This is reported on by the BBC. Oxygen discovery defies knowledge of the deep ocean. And listen to this. Scientists have discovered, quote, dark oxygen, end quote, being produced in the deep ocean, apparently by lumps of metal on the sea floor. About half the oxygen we breathe comes from the ocean. But before this discovery, it was understood that it was made by marine plants photosynthesizing, something that requires sunlight. Here, at depths of 5 kilometers where no sunlight can penetrate, the oxygen appears to be produced by naturally occurring metallic nodules, which split seawater, H2O, into hydrogen and oxygen. And so a bit of a wrench has been thrown into the whole deep sea mining debate with this article in the BBC, among other publications. Finally, a couple of more headlines here. Democratic Republic of Congo summons Uganda diplomat over M23 conflict. So Congo is still thinking that Uganda is involved. There's been a humanitarian truce extended for 15 days to August 3rd. And both sides have been saying the other is breaking the truce. And also in the Congo, finally, U.S. says billionaire Gertler's royalties must go to Congo for sanctions deal. So we were also seeing how the U.S. was lifting sanctions on Dan Gertler, but as part of that deal, they want Dan Gertler's royalties in the Democratic Republic of Congo going to the government. And you can imagine Congo is just fighting hard to get their royalties back. And the U.S., of course, wants to play nice, seemingly, with the Congo, as the copper that is there that we were discussing in that first article is among the world's biggest deposits. Of course, the copper belt spanning the DRC and Zambia. That is our look at the larger world. If you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer and on Instagram at thenorthernminer and on Facebook, LinkedIn, and YouTube, where we also host these podcasts and wherever podcasts are available, including Spotify, SoundCloud, and Apple Podcasts. And with that, let's turn to the news. And turning to the website, Western miners push for higher metal prices to ward off Chinese rivals. This is Reuters via mining.com. It's such an interesting question. Can higher prices locally solve the problem? Because if you're the car manufacturer in a globalized world trying to sell, cars to Africa or Southeast Asia or South America, does it solve your problem as a car manufacturer is kind of the first thought that waltzes into my head. Let's see what this says. The only U.S. cobalt mine sits fallow in the northern Idaho woods, a mothballed hunk of steel and dirt that is too expensive for its owner to operate because Chinese rivals have flooded global markets with cheap supplies of the bluish metal used in electric vehicle batteries and electronics. Jervois Global, which dug the mine into the side of a nearly 8,000-foot mountain, or 2,400-meter mountain, watched helplessly last year as cobalt prices plunged after China's CMOC group opened the Kisanfu mine in the Democratic Republic of Congo, pushing global production of the metal to an all-time high. It's not just copper in the DRC, it's also cobalt and tantalum. The Idaho site, which Jervois bought in 2019, was idled in June 2023, just weeks before it was set to open. More than 250 workers lost their jobs. A skeleton crew now rotates unused rock-crushing equipment weekly to keep it from flattening under its own weight. Quote, "We were straightforward with our staff and told them, this is all about the price of cobalt," end quote, site manager Matthew Langerich told Reuters during a visit to the facility. Jervois said cobalt prices need to reach at least $20 per pound for the site to open, but prices sat near $12.17 in July. And scrolling down a couple of paragraphs, that has fueled growing calls from some policymakers and miners, including Jervois and Albemarle, for a two-tier pricing system with a premium for sustainably produced metals, according to interviews with more than 36 traders, investors, executives, purchasing agents, and pricing agencies. The plan is to charge more for a metal that is produced sustainably, whether that is through direct transactions or via multiple prices for a metal listed through future exchanges, depending on production methods. For example, there would be one price for standard nickel and another for green nickel. And here's a quote from Morgan Bazilian, director of the Payne Institute for Public Policy at the Colorado School of Mines. Quote, "Western miners simply can't compete with China, and China has shown the willingness to drive market prices way, way down," end quote. It seems like this is the direction things are going to go. The problem from my perspective is the justification and the reasoning underlying this idea of having a green nickel price or a green metal price is because Western mining companies can't compete with China and sell the metal for that same price. Therefore, we're going to create a sustainable metal price. I'm kind of back to this much simpler idea of if China wants to sell us all their cobalt at below our cost, let's just buy it all. I don't know why we don't do that. And then we hear from the stockpile people at the Department of Defense and the U.S. government, and they say, oh, well, there's a lot of cobalt on the market right now, so we don't need to buy any. When the Chinese are actually buying cobalt right now because it's so cheap, and they are stockpiling it. So instead of rear view mirror thinking, okay, we're looking back and it seems like the market's fine, we need to actually, as Wayne Gretzky said, skate to where the puck is going. And ultimately, if it's really cheap and nickel and cobalt is being given to us in a world where we're seeing copper, at $4.18, because maybe China has opened the floodgates, which actually there is a story out there of how they're, producing more copper from their refineries. Like, let's buy it. Let's buy it all. I don't understand. Like, to me, that's a much simpler market solution, because the problem is going to be you've just shifted the problem of costs onto the automobile manufacturers. Sure, we'll have the metal, but we're going to have the metal at, is it going to be double? Is it going to be $20 cobalt versus $12 cobalt? So what does GM do? And how do they compete with BYD, who's going to be putting out, a $9,000 Seagull, right? So to me, it just seems like it's shifting the burden onto, manufacturers who use the metal. And you're kind of back to point A, it's just going to be more expensive. So just buy the metal at the cheap prices seems to me a much more elegant, simpler solution. As Michael Scherb says, later in this article, CEO of Appian Capital Advisory, who I think frames it perfectly. Quote, "The question is really for car companies. Are you okay with something that might be priced lower, or are you willing to pay premiums knowing that this is sourced sustainably in the correct way?" End quote. And really, the car companies are going to follow the consumer, aren't they? And so it seems to me the end result of this is the government's going to have to basically put a tariff on non-green metals or anything that's made unsustainably, right? And then maybe the car company can compete, at least in local markets, but any other market that doesn't put that tariff on, that environmental tariff on non-green metal, say maybe somewhere like Brazil, for example, you're just going to be at a disadvantage in a globalized market if you're trying to sell your GM cars in competition with BYD. So again, it just seems like the real solution here is stockpiling, I would argue. Let's continue. And just a headline here to illustrate the situation. Lynas, a rare earths producer, Lynas Rare Earths Q4 revenue falls on output slump and lower prices. It's Reuters via mining.com. Lynas is struggling. Interestingly, another headline, Microsoft invests in Ontario-based rare earths recycling company. And recycling really is the joker card, the unknown in this whole situation. If recycling can really be taken to the next level, it could change things quite dramatically. Let's read a couple of paragraphs here. This is by staff at mining.com. Cyclic Materials has received an equity investment from Microsoft's Climate Innovation Fund, which is dedicated to accelerating technology development and deployment of new climate innovations. This investment is representative of Microsoft's commitment to a circular economy and interests in hard drive rare earth element recycling, the Kingston, Ontario-based metal recycling firm said in a release. It did not disclose the dollar amount. And here's a quote from Brandon McDaw, Senior Director of the Climate Innovation Fund. Quote, "Microsoft is working to achieve zero waste across our direct operations, products, and packaging by 2030. This means adopting a circular economy approach. As demand for rare earth elements continues to grow in importance, we're excited to support the creation of a sustainable supply of these materials with this investment." End quote. So very interesting there. Continuing on, U.S. senators release energy permitting reform bill. And just briefly, U.S. Senators Joe Manchin and John Barrasso, on behalf of the Senate Energy and Natural Resource Committee, released on Monday the Energy Permitting Reform Act of 2024. The legislation could speed up approvals of clean energy, pipeline, and electricity transmission projects by shortening some federal environmental reviews and setting limits on court challenges. And here's a quote from Manchin. Quote, "A common-sense bipartisan piece of legislation will speed up permitting and provide more certainty for all types of energy and mineral projects without bypassing important protections for our environment and impacted communities." And Barrasso added, quote, "Washington's disastrous permitting system has shackled American energy production and punished families in Wyoming and across our country. Congress must step in and fix this process. Our bipartisan bill secures future access to oil and gas resources on federal lands and water. Interesting headline, S&P Global, Zambia, US, and Canada slowest for mine development. And it is quite shocking. I was actually very surprised to see Zambia at 34 years, which is quite astonishing. And here's just a couple of lines here. Mines in the US go from discovery to production in an average of 29 years, longer than in any country except Zambia at 34 years. Canada is not much better at around 27 years. So you can see why they are working on legislation there. Another headline, Saudi Arabia to visit Brazil and Chile as seeks to diversify mining. This is Reuters via mining.com. Saudi Arabia's mining minister will visit Brazil and Chile over the coming 2 weeks, the ministry said on Sunday, as the world's leading oil exporter seeks to expand its international presence in mining. And really, again, as we take a step back here, we have to really consider what it means if the mining sector is about to eat the energy sector. If it's true that we're going to start getting a whole bunch of our energy from metal rather than hydrocarbons, we have to really consider what does that mean if the mining sector is going to eat the energy sector. Continuing on, in Brazil, talks will cover mining, food processing, and aviation. While in Chile, the focus is on lithium needed for electric vehicle batteries. A Saudi government statement said, quote, "This aligns with the kingdom's direction towards expanding the production of EVs," end quote. Seems like a crowded area, EVs, doesn't it? Everybody wants to be selling EVs to everybody else. It's getting interesting. Continuing on, Indonesia launches nickel tin online tracking system. This is Reuters via mining.com. And it says here, Indonesia launched on Monday an online system to track movements of nickel and tin from mines to domestic processing facilities to improve accountability and government revenue, authorities said. Speaking at the launch, Finance Minister Sri Mulyani Indrawati said the system had improved governance in the coal sector, including by forcing companies to pay liabilities to the state, and she hoped to replicate this with nickel and tin. So very interesting. So these tracking systems very likely will come into effect because it seems that the governments, there is just too big of an opportunity for governments to get their share of the revenue. A couple more headlines. Vale to open new copper nickel mine in Ontario. This is by a staff writer at mining.com. Vale Base Metals is set to open a new open pit mine at the historic Stobie mine site in Sudbury, Ontario. This project is expected to cost $149 million US over the next 4 years. The new Stobie mine will produce nickel and copper with an initial production target of 300,000 tons nickel and copper this year, ramping up to 1.5 million tons annually by 2025, continuing until 2027 or 2028. The project will also yield valuable byproducts such as cobalt and precious metals. And we have a quote from Gord Gilpin, Director of Ontario Operations for Vale Base Metals. And he said, quote, "This project is not just about mining. It's about creating sustainable and inclusive growth," end quote. And finally, Ukraine seeks experts to revive war-ravaged steel sector. This is Canadian Mining Journal. Ukraine is issuing a call for international mining experts to boost its steel industry, accounting for about a tenth of the economy, as the war crushes infrastructure and takes most of its workforce. And there's a quote from Alexander Kalenkov, president of Ukremetallurgprom. Quote, "A show of support from the global labor force is much needed to provide advice and skill sharing with those in Ukraine," end quote. He also wrote, quote, "You will be part of a historic effort to rebuild a nation and reshape an industry," end quote. Those are your news stories. Now, let's take a look at metal prices. And turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.23%. That is 0.05% higher than last week. The UK 10-year gilt is yielding 4.15%. That is 0.08% higher than last week. And the Italy 10-year bond is yielding 3.76%. That is 0.04% higher than last week. So Italy bond yields significantly lower than U.S. 10-year bond yields, interestingly. Turning to precious metals, gold is trading at $2,405.80 per ounce. That is $36 lower than last week, but still above $2,400. Silver is back below $30 at $29.17 per ounce. That is $1.79 lower than last week. So big drop in silver. Platinum is trading at $947.20 per ounce. That is $50 lower than last week. And palladium is trading at $883 even. That is $53 lower than last week. Turning to industrial metals, copper is also lower at $4.18 per pound. That is 33 cents lower than last week. Iron ore also lower at $108.45 per metric ton. That is $1 lower than last week. Aluminum also down at $1.05 per pound. That is 7 cents lower than last week. Lead also lower at 95 cents per pound. That is 5 cents lower than last week. Nickel is trading at $7.35 per pound. That is 26 cents lower than last week. And tin also lower at $14.08 per pound. That is $1.20 lower than last week. Cobalt is also lower at $12.08 per pound. That is 24 cents lower than last week. And lithium breaks $12 and is now trading at $11.76 per kilogram. That is 70 cents lower than last week. So lithium continues to drop. Uranium is also lower at $84.35 per pound. That is $2 lower than last week. And zinc is also lower at $1.24 per pound. That is 10 cents lower than last week. So all metals down on the week, and quite significantly, I might add. Copper, you're going to hear of the big shortages in copper coming up in our interview with Northern Miner Western editor Henry Lazenby. So just a very interesting situation in the metals, down across the board, moving in unison, suggesting larger macro factors at work. Perhaps Biden stepping out of the race. You wonder if the U.S. election and predictions of a Trump victory are actually impacting the metals markets. And those are your metal prices. Coming up, I'm very pleased to welcome back to the show Henry Lazenby, Western editor at the Northern Miner. And he describes his trip down to Boca Raton to Rule Symposium and everything that took place there, the mood, the people, what was said, the big insights, what was the focus. As you'll hear, copper, a very big focus, interestingly, and silver, as you will learn. So a fascinating interview with Henry Lazenby. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome back to the Northern Miner podcast, Henry Lazenby, Western editor at the Northern Miner. Henry, welcome to the show.
Hi, Adrian. Thanks for having me. It's my pleasure.
Well, it's always a pleasure, Henry. The audience always responds quite well to our interviews here, so it's wonderful to have you back. You are somewhat freshly back from the Rule Symposium at Boca Raton.
Yes. Okay. Well, thanks for the opportunity. Back in Florida about a week ago, I did attend the Rule Symposium. While we were sweating it out in the tropical heat, the conference attendees were pondering really why it appears that investors are giving the industry a cold shoulder. There was a lingering question amongst people asking, where has the general investment money gone? It seems like there's a little bit of a drought happening at the moment, as it does, as cycles happen. People have openly wondered, like previously we saw the biotechs take some capital away, and then, technology, also the AI wave. And currently it seems like there's a similar pattern, but people aren't really sure where it's going. Then others are quick to point out that the good projects out there do get funding very quickly. And oversubscribed financings has also been a theme. So there are some contradictory things, but generally commodity prices remain historically very high. Copper, gold is setting records still. So, there's a lot of positive sentiment, just depending who you talk to.
It is interesting. I think you characterize this market well. Like my impression from over here is investors still want to invest, but they don't want to invest in the 1 in 100 sort of shot. Like they want to kind of lower their risk. So if something looks like a bit of a closer to a sure thing, that's much more attractive than something that might give bigger returns, but is less of a sure thing.
Yeah. Well, again, I have to say it depends on who you ask. For instance, Symposium host Rick Rule, who is a well-known industry personality and speculator, especially focusing on the junior sector. He has the contrarian approach, and I asked him how that is playing out for him in the current market. And he said, there's nothing that's really hated at the moment. And of course, like something that, people think is oversold or don't like at the moment for whatever reason, such as uranium has been hated for the best part of a decade. That obviously was his opportunity to invest heavily in this sector. And I think he's already starting to see the positive results of that contrarian strategy by investing when the market was really not liking uranium. So, yeah, that being said, Robert Friedland also made an appearance via video, though. He was caught up with business in Colorado as he has some projects over there, of course. And he was just noting the global impending shortage on the copper metal. And he actually made a very important point, I thought, which might be a little floating under the radar, is that, one should really consider the generally underestimated impact that modern warfare would have on copper demand. Should some major calamity go down, he made the connection referencing a mainstream media newspaper article, ostensibly thinking how a Chinese invasion of Taiwan would look like. And the bottom line there is that it would basically be a AI drone fought war. And so it comes down to the quality and quantity, obviously, of the metals you have access to. And it comes down to technology and the advancements there. For instance, if your drone has a higher latency than my drone, yours is the one that's going to get shot down first. So there's a very kind of a real connection to mining when it comes to the war aspect. And we unfortunately do see quite a bit of that around the world at the moment. But it all just underlines that copper is set to soar for the next several years, perhaps like a price re-rating in the offing, something certainly to watch. The other thing that was very interesting to note, Friedland said and make reference to, was the potential he expects still to capture a green copper premium price at some point down the line, but he didn't go into much more detail at that time.
Very interesting. There's so many directions we could go here. I mean, my first thought while you're discussing the importance of critical minerals in warfare is, how far this industry, in a sense, has come from a narrative perspective, from the periphery of the news narrative, as we both know, really from the outskirts of concern about this industry, in the mid, 2010s, and look at where we are now, where it's like wars can be won and lost by this, humble industry, so to speak. So what I just kind of marvel at that sort of change. They call it a cyclical industry, and that seems to be an understatement when you describe that. So very interesting. And the green premium, I mean, this is something, of course, like I would call it one of the big themes of the year that we've been seeing, with the nickel issue and Andrew Forrest and Wailu Metals calling for it, the LME under pressure. And of course, I mean, the person I first heard about this idea of a green copper price was actually Robert Friedland on the Northern Miner. I think it was TNM Leaders, maybe 2020, 2021. So he didn't expand too much on it, but the fact that he said it at all, I think, is interesting. So he was saying like he believed it was going to happen. Is that correct?
Listen, no, he did say more to it. It really boils down to the quality of the developments at his tier one projects he has, right? For instance, Kamoa-Kakula in the Democratic Republic of Congo. They are building the hydro dam facility there, and they are bringing more turbines online. He mentioned even just building a mine, how much copper it takes. He mentioned one of the blades there for the hydro turbines weighs something in the area of about 90 tons of pure copper. And he also referenced the hundreds of kilometers of copper wiring that they have laid to date to get that operation up and going. Of course, it is producing and it's ramping up quite rapidly. And of course, that's just one of the major multi-million-dollar projects that they are bringing up on stream over the past 12 months and the coming 12 months. The next one online for them will be the Platreef PGM and nickel project there in South Africa, which is expected to start production from January.
Okay, so very interesting. So just while we're on Friedland then, did he mention Africa at all, like in a geopolitical sense, or how the environment is? Like I saw reports on, I think the Africa report and maybe even Africa Intelligence, which is kind of this very expensive paywall kind of intelligence media outfit, saying that Robert Friedland wasn't as popular or as welcome as he used to be in previous times. Like, did he talk about Africa much and how excited he was for it, or was it kind of quiet on Africa?
Interesting question. I think by inference, one would say he was quieter about Africa per se. It was telling his current focus is North America. He is investing significant resources into the Ivanhoe Electric project there in Arizona. And then also with Ivanhoe Electric exploring the historical copper gold district in the Tintic region of Utah, just south of the Kennecott copper mine, that Bingham Canyon mine, which is the largest open pit hole in North America, if not the world, if I'm mistaken. So yeah, lots of near closeology exploration also happening in that Tintic. Sean Rusin is also busy with a Cisco development looking for discovery there. And Rio Tinto itself is also looking on some adjacent properties there. So that's certainly the Tintic exploration area emerged as one of the most exciting places for me in recent months.
And finally, just with Friedland, remember in London, I don't know if you saw the video of him speaking. I assume you did. It was a remarkably kind of dark and pessimistic interview that he gave. He had a tough plane flight before when he came into London for our conference, but it was remarkably, I would say, pessimistic. I mean, it was, I think, late October there. So, of course, it was right after October 7th there in Israel. Was he a little lighter this time around?
Yeah, he was quite light and optimistic. It should probably be then mentioned he was video conferencing in from Telluride, Colorado, where he was sitting with a beautiful view of the Colorado mountainscape there. Yeah, very relaxed, optimistic. I think he is just so convinced about the copper opportunity ahead of him. And, he was just referencing the millions of dollars that they'll be making every day. And it will be producing some of the cleanest copper and nickel and PGMs at some of the cheapest production costs in the world. So he's really looking solid in the current landscape.
As ever, very impressive. So zooming out just a bit, like in a sense, we jumped right in the conference here. Like, what was the program? Was it like 2 days? It was in Boca Raton. Can you sort of set the stage a little bit?
So it took place from July 9 to 11 in Boca Raton, Florida. And so for the Rule Symposiums, Rick Rule explained the purpose is more to educate investors. They had the Rule boot camps there as well, which educates retail investors about how to discern good quality projects and leadership teams from the rest. Something interesting he mentioned is that these skills become so much more relevant in light of him saying that only about 10 to 15% of juniors are viable companies in the current landscape. That means over 2/3 of junior miners are essentially worthless, or unviable. And then unfortunately, because of that majority really casting a pall on the rest, those viable companies are suffering with unjustifiably low valuations. And so it makes life difficult for them when the commodities underpinning the companies outperform the underlying equity valuations. So there's a bit of an incongruency there, but that obviously is what really draws a lot of the investors in, because that's the opportunity. They believe that someday that reckoning will come and the revenge of the miners will play out.
It's a funny thing. I mean, I've been basically following the gold narrative, and then since 2010 and maybe even 2009, shortly after the financial crisis. And of course, I started at the Northern Miner in 2012. And in a weird way, I would say we're still waiting for the real kind of like, we've gotten a couple of kind of cyclical moments. You might say 2016 was a bit of a low. I think in January, you could buy tech for $3. And of course, tech is, at least 10x that, maybe a lot more. So there have been sort of moves, but we haven't really ever seen, in a sense, it's always like, especially with the gold miners. Again, we're like Agnico Eagle sure is doing better. I haven't looked this week. Interestingly, I would say as the regular market does fairly well, like investing in mining stocks like Barrick, for example, just to pick one out, or Newmont, pick your gold miner. There are some that do well, but as a whole, if you look at GDXJ, what a tough business this has been. So I guess saying all that, how was the mood at the conference? Was it well attended? Were there a lot of people? Was there excitement in the air? I would imagine it was kind of neutral to positive neutral. What did you see?
Yes, I would say it was well attended. There were about 450 paid attendees, and then several support staff, etc., that support the attendees. They're obviously C-level executives and also high net worth investors who have come to listen to company presentations, and then again also to participate in the boot camps and learn more about how to navigate financially as an investor these markets, focusing on these equities. The mood was neutrally optimistic. How can you be in this industry without being an optimist?
It's true. Good point. Yeah.
You're not going to go far in mining if you're naturally negatively inclined. You're going to get crushed very soon. That being said, those questions about some companies asking, where the easy access to money seems to be over for now. Then also there's some talk about, the appetite among the seniors for mergers and acquisitions. Obviously means that the junior sector also has an opportunity, and many have pointed out, certainly, for instance, with uranium, there is some consolidation happening with Fission Uranium, who was present there, getting bought out by Paladin Energy. That was a major one. And then elsewhere also, several junior plays, district plays. There's room for consolidation in British Columbia. I wouldn't venture any guesses at this stage, but there certainly is potential. And that creates some excitement for people. That's one of the tools how managements can crystallize some value for shareholders given a correct set of circumstances.
Okay, and just kind of finally on the crowd here, what was your sense of the age? Like, was it an older crowd? Did you see young people? Were there a lot of young people? Were there just a few? Were there any? What was your sense of the age demographic of the crowd?
I was surprised to see many young faces. There were some college age people there, obviously for the boot camps and just learning. There were some young retired investors who were also there because they wanted to learn about mining, which I got to talk to, which were very interesting. They made their money elsewhere in crypto mining, having gotten in on an early deal there, which went 1,000 times. It's just incredible. That person was below 30 years of age. So it's pretty incredible, the opportunities out there. But yeah, so then vast majority of attendees, I would say middle age to the older folks. Unfortunately, it is true. I think most of the C-level executives in the industry tend to be towards the senior level of their careers. And so it brings back the theme about education and transfer of skills and all that experience to younger generations, very much more back into focus. And I guess that's really the crux of why this kind of event gets laid on. First of all, to educate investors and to solicit deals, I guess, but also just really to learn and transfer the knowledge from the old guard. They've done it before. They know how to do it right.
Right. They've seen it before. So, I mean, you're obviously you're Western editor at the Northern Miner. You've been involved. You've been paying attention to the narrative quite closely. You've been writing it, with your articles. Did you learn that much? Like, I mean, you're mentioning, say, Friedland seeming to focus a bit on America. Interestingly, the green copper price. What sort of things did you learn that you didn't necessarily know before attending this conference, if anything?
I think one striking thing is back to the copper theme is Friedland mentioned by how much the cost of new production in former strongholds of copper like Peru and Chile, for instance, has increased. And so it becomes almost prohibitively expensive to put new production online, given the context that those mines they're dealing with are becoming tired, right? Like Codelco, those big assets that have been producing for decades, if not centuries, or getting tired with low grades. And so just kind of tapping every new expansion takes more money and becomes less feasible. Unless, of course, the prices goes higher. Friedland was complaining that current copper prices, even though they're historically high, are still woefully inadequate to solicit more projects actually moving down the development pipeline. And as it stands, analysts continue to warn that the development pantry for copper remains fairly bare, and there's definitely not enough production coming down the pipeline. We need in the area of 5 to 7 more escondidas almost every year to keep up. So something is going to give at some point in the future. The fundamentals are headed for a major clash, if you will.
So copper was mentioned. Were there any other metals that people were excited about? Like you mentioned that Rick Rule had sort of, maybe uranium, a lot of that play had played out already to a certain degree. Was there anything else that people were excited about?
Yes, I should preface my answer really by saying also I spent most of the conference sequestered in my little video studio doing about 30 video interviews in about 2 days. So much of the formal content I was not privy to, unfortunately. But one of the themes I did then pick up still was silver. People are very optimistic about silver. And I think it's really now coming into play with the lag effect starting to take effect. They say silver is the poor man's gold, right? So when gold prices rise, silver usually reacts with a bit of a lag. And then as soon as it starts to move, it usually overshoots the move gold made in relative terms. And so that's really one of the key attractions of investing in silver. And I think that maneuver is playing out in the markets more or less over the past several weeks.
Interesting. And what about the battery metals? Like, did they come up at all? Like lithium, cobalt, even nickel to a certain degree? Like, was there much discussion?
Yes, certainly battery metals were mentioned, but in not the same kind of vigor and enthusiasm perhaps as previous conferences. Lithium, I think, is a little bit muted at the moment, but you do have several companies in attendance there talking about their assets, pegmatite assets, clay assets in North America that they are trying to get investors to bite into. But I think it's possibly some of these companies that are complaining the market is a little bit harder to access at the moment. And so I think we can understand possibly why that is, with the prices just coming off their highs and the fundamentals looking a little bit softer over the foreseeable future. Not much mentioned specifically by name other critical minerals. I didn't hear much about cobalt specifically, not really other battery metals by name. It's really about copper at the moment, copper and finding that precious metal sweetener with it. That's really what the people are after. And so that's why I think the Tintic region of Utah is really being mentioned so much. There's a lot of money for, in discovery exploration going in there right now. And interesting enough, Ivanhoe Electric is also deploying its Typhoon proprietary exploration technology there in cooperation with Rio Tinto. So some exciting stuff happening. I hope for their part that they do make some more kind of Kennecott-sized discoveries.
And of course, there were several other CEOs over there like Bob Quartermain, Sean Boyd, Craig Perry, and Sean Rusin, among others. Were there any big messages that you heard from any of them in the opportunities that you had to attend the show?
Yeah, one of the keynote presentations that I did manage to attend and listen to and cover for the Northern Miner was the Mining Legends panel, moderated by Rick Rule, and yes, including Quartermain, Boyd, Rusin, and Parry, each in their own right, having created millions, if not billions, in value for shareholders and themselves, of course. And so they were digging down a little bit into what does it take to really make a mining titan. And I thought they had quite interesting things to say. At the top level of it, it comes down to having a real grit to your perseverance, sticking a real tenacity, having a singular focus on the geology that you're working with, and then maintaining financial discipline throughout the process. And then one of the other key things that you have to have is luck, which some people would argue you make yourself. So I think when you apply the kind of discipline that Sean Boyd and Sean Roosen, for instance, and Rob Quartermain has demonstrated over the years, just creating all that value, you make your own luck. I want to just touch on, for instance, Sean Roosen's story with the Canadian Malartic mine. Osisko Mining 1.0 back in the day brought the asset out of distress for like a very cheap amount, something like $888,000. And then somebody asked him, so what's with the eights? And they said it was just somebody had something about the Chinese lucky eights, and we just went with that. And so those lucky eights translated several years later into a $4 billion sale to Agnico Eagle and Yamana Gold at the time. Lots of value created there just by knowing what you are working with and having a belief and that tenacity to see things through, even in the face of challenges.
Okay, excellent. Fascinating. And just finally on the conference here, what did Rick Rule say? Did he have any particular message? Where are things at for him as he looks as, legendary investor, speculator in the mining markets? What was the message from Rick Rule?
I mean, one of his favorite mantras is the cure for high prices is high prices, and the cure for low prices is low prices. And so that speaks to his contrarian investment philosophy. He's always confident that if prices go higher for a certain commodity, that means that it will kill the development pipeline for that commodity. And eventually, there will be a supply crunch, which will prompt a price rise again in the commodity and then new investment in the next cycle of development. And so that's really the fundamental thesis of his philosophy to invest. And he's made quite a bit of money just following that and just being patient.
And as far as where we are in this cycle, you were mentioning that earlier in our conversation that, nothing is hated right now. So what does that mean, do you think, from Rick Rule's perspective? If nothing's hated, I guess he's not buying, but maybe he's not selling. Maybe he's selling some uranium stocks if we had to guess out loud. But I guess he's in a middle point where he's not necessarily buying anything.
I think he will still be buying because the general consensus is that the industry is still undervalued. The fact is that the entire value of the mining industry is but a fraction of the market capitalization of a single one of the largest tech companies, right? Which really just puts in perspective the massive disparity. And so, this is a flippant observation. During the week, I just had a conversation with an analyst and jokingly, we were discussing how younger people perceive mining. And I said, the moment you tell them, somebody that doesn't know about mining, this following fact that everything you see around you in the modern world is either grown from the ground or mined from the ground, then they start to understand that mining is really important. And then that person remarked, oh no, but today you cannot have modern agriculture without having mining first in any case. So it really comes down to mining only. It's the primary building block of modern economies, and it's been that building block through the centuries, essentially. So the opportunity remains, the thesis remains just as strong, even in high quality stocks like Agnico Eagle. Those kind of companies, they might be priced at a premium today, but they still have a strong runway ahead of them if, that thesis of a proper market valuation ever gets to play out. But if it will, we cannot say.
That is fascinating. And of course, as we move closer towards a green energy grid, mining is going to take over part of the energy, sector, if not all of it, in theory, if these green programs succeed, to your point here. So just finally here, as we wrap up, so you're heading over to the Golden Triangle for some site visits. Tell us what you're up to next, Henry.
Yes, I'm pretty excited. Tomorrow morning, which will be July 23rd, I'm headed up to the northern British Columbia to Terrace and surrounding district, where I will have the opportunity to visit with Kina Resources and the SK Creek project of Seabridge Gold and their KSM project, and also Dolly Varden Silver and the Kitsault project, all relatively close by each other there in a very highly prospective area of British Columbia. Lots of gold have been produced there in the past and assume much more to be produced in the future.
Well, we look forward to the stories, and those will, of course, be on the Northern Miner. As you can find Henry's reporting on the Rule Symposium, where there's already 6 articles. Some are videos, 2 summaries there of panels. So, Henry, thank you for joining us. Thank you for the time, and thank you for the excellent reporting. As usual, Henry Lazenby, Western editor of the Northern Miner, thank you for joining us once again on the Northern Miner podcast.
It was my pleasure. Thank you.
Thank you once again to Henry Lazenby, Western editor at the Northern Miner, for sharing a very interesting discussion. Thank you, dear listener, for joining us once again. In the heat of summer here in mid-July already, what a summer it has been. I hope you're enjoying it, and lots to pay attention to out here in the mining sector. So thank you once again for joining us. If you want to help out the podcast, please leave us a review in the Apple Podcast directory. Share it with your friends. And until next week, take care.